Let me welcome Mr. Deepak Ramaraju, sir, Senior Fund Manager from Shriram Asset Management Company.
Talia.
Thank you everyone. Good afternoon. I hope the lunch was not too heavy for everybody. So it's going to be very number oriented session. So it's going to be concepts. I don't want anybody to doze off because of this. So let me make it as light as possible to keep you all guys awake. So what is quantum intel? Before that, I think people have given my introduction. Chetan has given, the team here has given my introduction. I'll just take 1 minute. So passed out in 99, a chemical engineer, worked in production, sales, marketing, R&D, product development, have a diverse experience across the industries. So after that, by accident, I landed in an equity research company. So started as a financial modeler, especially in mining and as well as oil and gas sector. So over a period of time, I grew up in that vertical, started off with the BCom books, understanding what is cash flow, what is balance sheet, went to the basics. So I knew how the industries work, how sales work, how the production works. I knew how the capex, all those aspects I knew. It was only kind of getting the numbers fitted into the balance sheet, how the balance sheet really works. I wanted to just understand that. So once that was there, I think I was kind of I felt that I'm part of the system, and then that's how I grew up in the entire financial service industry. So I started off my career in the financial services with an Australian company which got taken over by Sanlam Group South Africa. Was part of Sanlam Group, became the head of research for Sanlam Group South Africa. So supported the 7 fund managers across Sanlam Group, across the nation and different countries. So we have covered the most illiquid market to the most liquid markets. So I've seen the markets like Japanese or US market to the most illiquid market like the Koti Iowa, where you have to call up the commissioner telling him to open the stock exchange. Once in 5 days the stock exchange opens. There are only 5 stocks which are listed and you need to call him and tell we want to go in for a trade. So that's how the stock market works there. So we have seen such kind of markets as well. So we have built different kind of financial models across different kind of geographies, understanding different kind of macroeconomic cycles for different geographies, understanding their culture, their management practices in different countries, their economic parameters. So got a diverse experience. So at the same time, Sanlam also had started a kind of AMC business along with the SMC stockbroking, and they also had invested in Shriram Group separately. So with SMC, the marriage did not go through well. So the fund which they had started, a seed fund, that came to me as for management. So this was in the year 2013. So it was a $13 million fund, took it up to almost $42 million, almost 3.3 times return in 4.5 years. So won the Best Fund Management Award in South Africa. The Raging Bull Awards for the Far East Asia region in 2016, was nominated in 2017 also. So afterwards in 2019, I was made the interim CIO for Shriram Life. Basically, it was part of also Shriram Group since 2016 onwards, because Sanlam had already wound up the deal with SMC, so they became completely invested in Shriram Group in India. So all the focus in India was through Shriram at that point of time for Sanlam. So I became part of Shriram Group from then. So I was being used as a troubleshooter wherever the performance is not coming in the equity funds. So they started using me there. So it was the first journey was in Shriram Life to turn around the performance there. So it was a kind of negative performance. I moved it up to the positive on the alpha. So I had to work with other colleagues in the Shriram Group and made up the performance there. I was the interim CIO. Then post-COVID, we acquired Way2Wealth as a stockbroking business. I was moved there to Way2Wealth to reinitiate the PMS business there. And in August 22, we got the new shareholders in Shriram AMC. So that's where I moved into Shriram AMC in August 2022. So first 7 months, I took time to build this entire quantum intel. So it might sound like rocket science, but not really though. So it's only very simple and very basic common sense. I'll try to make it as simple as possible. And after 7 months of doing research and back testing of the entire strategy, my board did not approve it in the day one to implement the entire models. They took time. They wanted to understand how this really works in the live market. So we parallelly started running the entire models and then also tested this in the market on a baby steps, like implement 10%, 20%. Over a period of time, we started implementing that. And from 1st of September, when the management and the trustees were confirmed that this model is giving a better return, that's when they gave me a clear go ahead to invest in all the funds. So from 1st September onwards, whatever the returns that you're seeing is all the results of the entire fundamental framework. Now, what's fundamental all about? As the name says, it's a combination of quant and fundamental. Now, what is quant? Quant simple is nothing but mathematics. The mathematics of stock markets. How stock market the prices perform, it's all about that. Like how we measure our health and health conditions, like checking our sugar conditions or the BP. The health condition of a company is nothing but its stock price. The stock price reflects the health of the company. It's a kind of reflection of what's happening in the company and altogether. So if you can analyze the stock price and track that pretty closely and understand what's happening in the stock price, you know what's happening in the business, how the business is performing, what's driving the stock price. Because stock price is a reflection of what's happening in the company. So that's what quant actually does. You'll actually get a benefit of understanding what the company is actually doing. So it's a reflection of that. That's what we try to dissect in the quant part of it. Now, typically fund managers are fundamental. They look at bottom-up kind of valuation, they look at value or growth kind of opportunity, analyzing the businesses. That's what we generally do as fund manager. I used to be a value kind of combination of both value and growth. I never used to be both growth or either value. I used to be a combination of both. So now in the fundamental aspect, I continue to have that. But the input for me, which comes for fundamental, is coming from the quant side. So that's what quantamental, the terminology quantamental is all about. Now, why we initiated quantamental is because before COVID, your cost of capital was lower because you had the low interest rates. The liquidity was very very easily available at that point. The liquidity was driving the markets at that point of time. So you had crazy valuations coming in 2021, and then the markets you saw kind of rising into the sky high at that point of time. But as we entered 2022, when the interest rates start going up, when the inflation started increasing, we saw that the cost of capital going up. When that happens, the liquidity dried up a bit, especially the international equity, the flows, the liquidity dried up. And when the flows dried up, it was only dependent on the domestic markets. Thankfully, our domestic markets were really strong, and our investors, and I have to really thank you guys, because you guys are the ones who are kind of structuring the entire stock market and getting the SIP flows. In fact, that is what is actually protecting the market quite strong, and we have been kind of able to sail through this entire crisis. So this liquidity is what is matters when it comes to stock market. When that got dried up, when the liquidity is dried up, and it becomes very challenging to stick on to the sectors or investments. So what is happening is, when the inflation is higher, when cost of interest rate is higher, people try to change sectors very slow, very quickly. So to give an example, 2022, you had auto stocks running for a couple of months, then you had defense stocks, then you had power sector stocks, then you had railway stocks coming in. So they all operated in multiple cycles, small business cycles basically. But underlying businesses were intact. There's no question of business performance. It was only the market performance of these cycles were getting impacted because of the cost of capital or the liquidity which is getting affected in driving the markets. So that was getting impacted. So to avoid that, or to address or overcome that kind of a situation, to avoid this kind of smaller cycles and outperform in that kind of a cycle, we use quant as a basis. Now, quant will help in identifying which business cycle is coming in, which business cycle is not coming in. So that's what we take benefit of that. And the fund manager challenge was to deliver consistently and outperform the market. So that's where we introduced this quantamental, and it became easy for us to drive the entire approach. Now, what are the pros and cons? If I were to be only a fundamental guy, I used to be a buy and hold strategy. Like I buy some stocks and forget it for next 10 years or 20 years. That has failed in the recent past. We are seeing quality fund managers who are getting failed because they're not able to beat the benchmark for some of them. I'm not telling everybody, but some of them who are not agile or able to churn the portfolio, they're not able to kind of sustain the kind of the pressure in the markets, because the business cycles have shortened, especially in the market cycles have shortened. So to overcome that, you need kind of a larger team, kind of analyze huge amount of data, and that's where the quant comes in to help. Basically, you get the speed and kind of able to analyze huge amount of data, and that will give a lot of signals. You can custom make your quant model such that it gives you a lot of time to analyze what's happening in the markets, and you can able to dissect what is important, what is not important, what is noise and what is really important, what is impacting the markets. Now, fundamental side, it gives you a long-term focus, it gives you understanding of the business in the longer term, whereas quant will fail in those aspects, understanding the long-term business impact. So that's where we look at that, and then we look at both quant and as well as fundamental here. Take the benefit of both. That's where we call it as alpha intelligence coming out of AI. That's what we call as alpha intelligence. That's what we call as quantamental. Now, the most important thing is it reduces the emotional bias. There won't be any emotional attached to this when once we have kind of the quant coming into play. So sorry. And more importantly, with quant and as well as fundamental marriage of that, we are getting to be more flexible, nimble, and you can churn the portfolio easily. You can make decisions very aptly, and it gives you the right kind of signals, and it helps you ride the trend. Now, how does this model really work? I'll just take an example here. For me, it's a combination of quant and fundamental. Now, when I tell quant, it's all about factor models. You have multiple factors like momentum, low utility, value, growth, size. Then you have alpha. You have multiple factors which are there in the market. But identifying which factor works in different economic cycles is what matters here. Now, what is momentum? Momentum is nothing but it's as per the Newton's law. If a stock is in continue to gain, it will continue to gain until unless there's an external force acting against it. Now, what is that external force? It can be the management policies, your competition, your industry policies, or the government reform for policies. These are the external factors which can impact the stock performance. So until unless any of those parameters impact, or even the valuation of the company itself is an external factor, until unless that impact, you're not going to see the stock price changing. So the stocks which are in momentum will continue to see the momentum. Now, what is stock price chasing? It's all chasing about the earnings growth. It's all about the EPS growth, what the company is going to deliver upon. So this is where we look at the factors. So I have three factor models here. So I'm looking at momentum, low volatility, and value. Now, what is low volatility? Now, momentum, as I said, it's a stock which is continuously going up. Low volatility is nothing but sometimes your stock goes up by 5%, comes down by 10%. You don't want that to happen in any of your portfolio. You don't want those kind of stocks. You want stocks operating in a particular range and consistently going up. That is the kind of stocks you want to pick in the portfolio. And third thing is obviously valuation. Because we all are Indians, we value things to the core. Until we squeeze out the toothpaste completely out of the paste out of the toothpaste tube, we are not satisfied. So that's our Indian nature or trend. So that's what we do even in stock price also. Until as we take the benefit of the valuation of the stock, we won't enter into any stocks. So that's where we look at valuation also pretty closely. So when I run the factor models, when I get the momentum score or volatility score or valuation score of every stock, the combination of all the three factors, I'll rank all the companies in a descending order. The stocks with the highest score factors, that means to say these stocks are having higher momentum, they're trending upwards, they're less in volatile, and they're cheap. All the three combination things are coming into the stocks. When these stocks come in the list, now that will act as an input for me as a fundamental. I don't have to run screeners, identify which stock is going to come tomorrow. Today this stock P is come down, tomorrow that stock price to book is come down, this stock has become expensive. So I don't have to do all those running the multiple screens. This quant will help me doing that. This quant will act as an input for me. I'll just this help me in ranking all the stocks which are really critical. Only focus on those critical stocks. Look at that and add back into the portfolio. So that's where it acts as an input for me in the fundamental side. Here we do all the analysis what we used to do in the fundamental aspects. Identify the management background, the valuation, the business know-how, what's driving the stock price, why it is behaving like this, what's the news, is the news sustainable or not, what's actually driving the stock price, is it manipulated or not, we understand that. If not, there's a solid news backing it, is there a reform backing it, or the earnings has been strong, the company is performing well or not. Until unless we are not convinced on this, we don't add back the stock into the portfolio. So that's how we pick the model, the stocks into the portfolio and add it into the portfolio. Before I go into the this one, I just want to share the model itself, how we are working. So if you look at my momentum score is 35%. So I'm taking three factors, as I said: momentum, low volatility, and value. Momentum is the middle of the order, so it's 35% weightage. Low volatility is 45%, and valuation is 20%. Now, why I'm giving this is because low volatility and value is a bit important for me because they act as a counterbalance for me, mitigating the risk. Momentum is a double-edged sword. In a rising market, it will go up. When it falls, it will also fall more. So to protect that, I'll have low volatility and valuation also to support that. So a combination of these three will help in driving kind of in a trending market, identify, protecting, giving alpha consistently. Now when I put these factors, I can run the model for large cap separately. I can pick large cap 20 stocks, 15 stocks, or kind of small cap, how many stocks I want to pick. What weightage I want to give between large, mid and small, I have the flexibility of that in this model. So I can change that, I can change the dynamics, I can look at the valuation of large, mid and small, accordingly tweak the allocation. Now I get the scores of every stock, and accordingly based on the scores I can give the weightage to the stock. So it's completely model driven. Now as a fundamental, I have the liberty to change the weightage if I think that it's too much overweight and there's a risk building up in the portfolio. I can always look at and cut down the weightage if required. But I'll not be removing it completely until unless there's something not satisfactory in the company or something bad news is there. Excuse me. So for large, mid, everything small, I get the weightage accordingly. My entire sizing is done. We have done the back testing from 2005 onwards. We have the stock list, everything tested. So we run monthly. End of the month, we run the models. So retail back test, it's the 1 month forward performance of the stocks. So end of the month when I run the portfolio, run the model, the stocks that I get ranked, I test it for the next subsequent month performance. So that's how this performance has been monitored. And to just give example, what's the main important thing? It helps in timing the entry and exit of the stock. Let's take up example of ITC. The first time it came in the month of May 2022. We saw recently ITC rally in the last year. It came in May 20. I'm taking ITC is because it's a very classical example. Everybody can correlate easily. Now, if you look at ITC, May 2022 is when it entered to my portfolio. It was somewhere here. The price was at 241, and it exited at December 2023. It's almost 1.5 years, more than 1.5 years of holding of ITC has been there. Now, eventually, when the ITC is on the top, that means to say my weightage on ITC is quite higher. As the valuation increases, or if the volatility is increasing in the stock, my weightage will automatically drop. That means to say when the weightage drops, I'm booking profit in the ITC. I'm taking out the profits automatically. So, if I look at 2020 December, it's somewhere here. Though we made a high, previous high, it saw that the stock started consolidating. This is when the model became activated. That's when the valuation is kind of getting higher, the momentum is dropping, and the valuation is also getting stretched. The three factor got built in. That's when in the month of December we booked profits and came out of ITC completely. So this model suggests when to enter, when to exit. We don't have to sit and do the timing aspect. That's the best part of this. And we have seen the kind of backtesting results also. Just take a minute. So we backtested this performance in a kind of drawdown phase, whether it's in COVID-19 or for that matter 2008 crisis. So we saw that this falls less and recovers very faster. That's the advantage. This model helps to recover in very short phase of time because the momentum kicks in when the stocks hits the bottom. The momentum will actually help. And so in a highly volatile market, where the current phase that we are going through, you have one day the stock, the valuations going up, and the stocks index going up in one day, and one day it's falling. So it's a high volatile market. It's not a trending market. You're not seeing the markets trending in a direction. That's when it's going to be tough. This model will fail. So that's in that phase. What we're trying to do is we try to come into cash and try to reduce our equity exposure so that we have a kind of counterbalance and we are ready when the market corrects a bit. So we have the right ammunitions to re-enter the phase. So that's why we have increased our cash position in the last 1.5 months. So we might have underperformed in the recent past, but yes, we are confident in the longer run this model will actually pick up. So in a kind of high volatile market, we tend to move into cash and then re-add back the stocks into the portfolio. consistently this model has proven and outperformance, and the results that you have seen in the actual live funds, the alphas that you have seen in those funds is actually backing up with the kind of backtesting results that I have demonstrated here. So the alpha that we have delivered in the funds is actually same as what the model backtest performance is. So that's it from my side. So all these numbers I think Chetan has already shown. So.